And we can just start. All right, we're on. Hi guys, welcome back to Poppin Podcast Pintu. Joined here today with me, Jonathan Hartono, the community manager of Pintu, and we're joined with a special guest from Pendle today, which is Dan. So, hi Dan, welcome to the
Hey,
podcast.
yeah, thanks for having me. Pleasure to be here.
Yeah, super excited to talk about today. So, guys, of course, we're talking about Pendle because Dan is here. Personally been using it, personally a big fan of the protocol. Maybe we here at Indonesia, maybe a lot of Pintu users or our Pintu Web3 wallet users have not been exposed to Pendle, and we're excited to dig deeper into it and probably learn from Dan on what Pendle is all about. So yeah, let's dive right into it. Dan, first question. We love to hear about histories of protocols. We love, this is a new technology, blockchain and DeFi. Can you talk about a little bit about the history of Pendle, how it came about, and what it started all about?
Yeah, sure. Um, so Pendle is a yield trading protocol where you can trade the yields of any given asset in crypto. But the idea of how it started did not come about from us wanting to trade yield. The idea came about in 2020, actually, when not sure if you remember when the food coin saga was at its peak maniac. You have things like Yam Finance, Pickle Finance, and some of the other food coins offering 4-digit, sometimes even 5-digit APYs. And we were active DeFi participants then, and we were wondering if there's a way for us to lock in those rates because they tend to flee after 4 or 5 days of announcing the yields, and the attractive 4-digit yields no longer there after a while. And we're wondering if there's a way for us to lock in those rates. And we were looking around at possible DeFi mechanics with the available products back then. There wasn't really any. Um, and we figured that that is a kind of like a product that people might be interested in. So we kind of went back to the drawing board and tried to figure out if there's a way for us to design a protocol to create fixed yield. And that led us to exploring different mechanics from just traditional finance in general, how people achieve fixed rates, and kind of pretty much copy pasted the idea of bond strips and just applied it into crypto. All we need is just an AMM to govern the movement of price of those assets. And yeah, that's kind of how the first iteration of Pendle came about, because we couldn't figure out how to, you know, achieve fixed yield in crypto. And I think that is a very important product, not only just in DeFi, but just it's an important financial instrument for any functioning financial ecosystem to even function in the first place.
Wow, that's neat. So you guys started 2020 then?
So the idea came about in 2020. So that's when we started iterating and building. Pendle V1 actually launched in May of 2021. So it was a good 9-10 months of from ideation to the first iteration of the product.
Cool. So 2021, and you've been iterating ever since, but the idea of the product has never changed.
Yeah, the idea of product has never changed. It's still a yield trading protocol. I think it makes sense for us to just stick to that idea because we know that people want to manage their yields, because that's what pretty much most money managers do in finance. You manage, your asset and the yields that you get and maximize it. And Pendle just gives a little bit more freedom for money managers to play around with their yields. And what we're doing is, at a fundamental sense, is splitting up yield from a yield-bearing asset and enables that trading. And the evolution of the product is mostly on either the user experience side, and the jump from V1 to V2 is mostly on the fundamental side to improve, the liquidity of the asset, makes trading more seamless, and just improve the smart contract layer of the protocol. But the idea of the core idea of the protocol remains the same to this date.
Ah, nice. Very nice. Yeah, who doesn't like juicy yields, right? I think back in the day, the food protocols or the food DeFi products where there was some really shady APYs, and it makes sense. But so that begs the question, though, to today. I mean, if our users go to Pendle, they'll see some pretty juicy yields, right? Can you tell us, is this legit, and how it works in a nutshell? Like, how can you offer like juicier yields than other protocols?
I wouldn't really coin it juicy yields per se, but uh, I think to understand that, you kind of have to understand how Pendle works a little bit. Um, just at a high level, Pendle is a yield trading protocol. Again, what we do is we strip the yield away from a yield bearing asset into two tokens. PT represents the principal of the asset, and YT represents the yield token of the asset. And these two tokens are tradable separately. I think if for those of you who are familiar with bonds, we're basically bond strips, but applied to pretty much all the protocols out there. I mean, all DeFi assets out there, where we strip away the coupon away from a coupon bond, and you result in a zero coupon bond, which is a fixed yield position, and a stripped coupon, which you can freely trade to and speculate on the coupon rates. Um, the thing is, in DeFi, that coupon rate or that yield from any given asset fluctuates a lot, and that's where you can get really outsized returns, or also can go to zero, depending on your thesis whether it plays out or not. And again, when you come to Pendle, the first thing you're going to see is the Pendle earn page, which is basically a simplified version of the Pendle contracts. And what Pendle earn does is we provide two things. First one is fixed yield. And again, fixed yield is achieved by stripping away the floating yield of the underlying asset and resulting in a fixed yield. So we're not really incentivizing anything there. It's just the fixed yield that you get is the stripped version of the underlying asset. You can think of it as like a zero coupon bond of the underlying asset, where at maturity, it redeem it back at par value. So essentially the same as a zero coupon bond, but the par is whatever underlying asset it is. Um, the yield the yield token component is more advanced, so it's kind of on the other side of the product suite, which is Pendle Trade. But I won't go through it for this question specifically. And the other thing that you can see if you go to the Pendle page right now on Pendle Earn is to provide liquidity. That just means you're providing your asset to facilitate other people's trades, whether is it to trade the principal token or the yield token. We kind of abstract it into a very simple UI that seems like a deposit, but well, in reality, behind the scenes, kind of you provide liquidity to our yield engine to facilitate trades on our AMM.
Nice. Well, although it's complicated, I think that gives our users reassurance that the APIs that you promise, at least on the fixed side, is real. It's a real yield. It's nothing that's it's engineered or nothing fishy, right, about it. So yeah, great to hear about that. Um, Furthermore, I think can you dig deeper into why Pendle has seen such growth? Um, Whereas, yeah, I think everybody knows that Pendle has seen tremendous growth this past few months, right? Was there any partnerships that was kind of the catalyst for that, or was it just a season of the protocols or Web3? Uh, Anything you
Yeah.
realize that contributed to
So,
that?
well, it can be a bunch of different factors, I would say. I don't think I can point it down into a single reason, but I'll just share a little bit. Um, we've seen pretty healthy growth since in the bear market. So we launched Pendle V2 in December of 2022, which is kind of still part of the bottom of the bear market, and we emerged out of the bear market pretty okay in 2023, and we our strategy was to associate ourselves with emerging narratives. And again, Pendle is a yield trading protocol, which means anything that generates yield can be plugged into Pendle. And it just so happens that narratives in DeFi tend to revolve around assets with yield. So in early 2023, you see LSTs as a very hyped asset class, where you see a bunch of liquid staking tokens come about. Lido became very popular. There's Rocket Pool, there's Swell, there's Origin, and there's a bunch of different other assets that came about. And I think as Pendle is being a yield trading protocol, we it was pretty easy for us to integrate all of these assets and kind of cement us within that narrative. And that gave us the first exponential kick up in adoption. And then Arbitrum came along, and then Pendle again. We're chain agnostic, and we're not really tied down to a specific ecosystem. And then we hopped into Arbitrum to um, capitalize on the existing narrative, and that gave us another exponential kick. And then the RWA narrative came in, and we joined that. We joined that as well, and then it gave us another exponential kick, and people start to notice us a little bit more. And then we ended the year in about 300 million TVL, if I'm not mistaken. So that ended on a pretty good note. And then Eigenlayer came about, um, and then the LRT hype started to come along, and then we figured again as usual, Pendle, we try to cement ourselves into narratives, and then now that LRTs are hyped and points are hyped, what can we do to cement ourselves within the narrative again? And then we try to explore whether we can enable points trading on a protocol, because essentially, if you hold asset and you get points are sort of like yields, but it's not really on chain. It's still part of the receivables of the asset. And again, we figured that okay, we can enable yield trading on points as well. So we tried it out, and then it turned out to be a pretty successful adventure for us. But again, I wouldn't really credit it into that one specific thing. It's just that again, the final exponential kick, once you're big enough, usually results in a pretty sizable growth. Um, and yeah, that was kind of like our final growth um, spurt until today. And fast forward from last year when we had 250, 300 mil in TVL, I think today we're inching towards 6 billion in TVL. So it's been a
Wow.
pretty humbling experience, but I think the growth journey it's never been easy. It's just a bunch of different strategies that we tried out, and then some worked out, some obviously didn't. And then hopping to narratives happened to be something that we're pretty successful at.
Wow. Wow. Almost, yeah, 5 billion plus, right? So congratulations to the Pendle team for that.
Appreciate it.
Personally, a big fan of the Pendle. You did mention RWA, which is pretty interesting. I did not know that. Is Pendle affiliated, or do you offer a RWA product?
It's more like, again, if anything generates yield, it can be in Pendle. And again, RWA
Ah,
generates yield. Back then there was SDI from MakerDAO, which was kind of in the center of the RWA hype, and we supported that. And then CoinGecko sort of picked it up, and then associated us as one of the RWA protocols, which I think makes sense as well, because as long as your protocol generates yield, or any RWA that generates yield for that matter, it can be plugged into Pendle. So that kind of enables um, pretty wide array of things actually. So imagine you have, hypothetically speaking, you have a stock that is tokenized, and then the stock earn dividends. But if that happens to be on chain somehow, including the dividend part, what Pendle can enable is we can strip away the yield away for the stock, which is we strip away the dividend payment of a stock, and then you can trade just the dividend payment, and you can speculate on the future dividend payment of a stock. Or you can tokenize real estates, which means you can speculate on the yield of the real estate value, which is the rental property or the rental yield of the property. And that kind of enables quite a lot of interesting strategy. It's just that right now there's no RWA specifically um that specifically enables these specific assets on TradFi to be parked on chain. Partly due to regulatory reasons, understandable. But I feel like once people figure out that hurdle to bring the RWAs on chain, I think it's just natural for us to just immediately hop into the narrative.
wow, that's amazing. Um, Another curious part for me about Pendle is um, the you know when you strip the core asset from the yield, right, and then there's point system in it. I think that's the genius part about it, and I love it. But at the same time, I'm confused. Is it actually completely decentralized, or do you actually have to partner with the protocol to be able to do that?
Of course,
And
at the end of the day, um, if it's on chain, we can tokenize it straight away because again, in DeFi, we work with on chain stuffs. But if the item that you're dealing with is fundamentally off chain or like tracked in someone's back end, you will have to work with that protocol separately to have this kind of arrangement. But I think Pendle, we're at a stage where, so the logic of tokenizing yield and the logic of stripping yield is actually not that hard. So you just bring that logic from a smart contract into a uh, just one of a few lines of codes on your database, and you just send that code to the partnering protocols, and like, hey, you run this code, and then this is basically how the entire accounting system for points on Pendle should be, and then they just run the script, and then they get the resulting results of yield tokenization. Again, it still requires a degree of work with the protocol just because of the nature of points. It's off chain. um, yeah, and then that's kind of how points tokenization works on our side. And again, if you're wondering, if you're a true crypto maxi and it's like, how can I trust, how can I verify that the points that are being given are actually legit? You cannot, sadly, because it's completely off-chain tracking.
I
It's more
see.
like a trust me, bro, kind of situation where you just have to trust the protocol. It's gonna honor their agreement.
I see. Yeah, it makes sense. Especially for the points system, right? It's completely off chain, and yeah, that makes sense. And we're glad Pendle is at a point where yeah, you guys can partner up with the protocols, and they will respect it. Um, and yeah, I think it's interesting. There's the strategies that people are coming up with in terms of leveraging your technology and this YT and PT split. Um, Another question I think common users would, if they dig deeper into Pendle, they would question. So, is YT and PT, the two tokens, are they reversely correlated in terms of, so it's the in the docs for Pendle that you call it like longing or shorting the yield, right?
Yep.
So is it so it so it's always reversely correlated. So when the API goes up, the YT is more beneficial, and PT is yeah. Can you explain a
It
bit
all,
more
it
about
all,
that?
it all, it all again, it all depends on the market sentiment, but the price of PT will be inversely correlated to the price of YT, not one to one. But I think the idea is, how do I do this? Um, if A plus B equals to one, if A goes up, B goes down, and if A goes down, B
Right.
goes up, and that's pretty much PT and YT. So PT plus YT is the underlying asset because the underlying asset is split into PT and YT. If PT price goes up, YT price goes down. If YT price goes up, PT price goes down. As simple as that. But I think it's more interesting to see why these prices go up and down. And again, something that is interesting is, for example, um, the YT price can be deduced into a percentage number, meaning um, if you're trading as the yield of a specific asset and people price YT at a certain price, you can kind of like reverse engineer the number. You can get this number called implied yield. And again, this dives a little bit deeper into the mechanics and yield trading numbers already. But the idea is that you can kind of see what people think the yield of an asset is worth. Now, if people think that the yield of an asset is worth a lot, like for example, the points from EtherFi back then, people were very bullish on EtherFi and people bought up a lot of YT. That causes YT price to go up significantly, which means that what I'm saying is that
Mm,
people are buying the yield of EtherFi's asset because people are bullish that the yields and points that Ether price ETH generating is going to be worth more than what they pay for. And that's what causes the YT price to go up. Now, with the YT price going up, well, in the app, we call that the implied yield number, which is the yield that YT is implying, that the market is implying. Now, again, remember I said YT price goes up, PT price goes down. Now, because there's a strong demand in YT that causes YT price to go up, PT price goes down. Again, remember, PT is the principal of the underlying asset. And at maturity, which means at the end of the period where YT no longer generates yield, PT is worth whole again, where you can redeem at par value. Think of it as a zero coupon bond. At maturity, you can redeem it for par value. Now, because PT price drops a lot while people are buying the YT, that causes a discount between the current price of PT and the par value of PT to be a lot, which means the fixed yield that people are getting is high. Now, again, this means that there are two sides of the coin now. Because of YT demand, PT's yield becomes high, and then there's now PT demand. Again, if there's PT demand, it will bring YT price down, which also brings YT demand. And this back and forth duality of people buying the fixed yield portion or the points or like the yield portion is what gave us the tremendous trading volume growth that we see in the past couple of months. And you can kind of see that dichotomy play out even in the type of users that interact with these assets. So users that buy up the yield portion are generally more degen, and you can see from the addresses that buys YT, they tend to be more on the risk taker side. Whereas the people who buy the fixed yield portion, the PT portion, are generally addresses with much larger capital, who I assume are funds or other forms of investment capitals that are generally more risk averse, and they tend to err towards the fixed yield side of things. And that duality between the degens buying one side and people buying the fixed yield side is what gave us that pretty interesting volume.
Yeah. Sorry, can I pause here? I think
Sure.
somebody's lagging. Is it me or you?
It's fine on my
are,
side.
are you fine?
Yeah, if it's fine on my side, then I can hear you well as well.
Okay, cool. So it's probably on my side, but your video lags a couple times there for
Yeah,
me,
all
but I
good.
can hear you just fine. So yeah, we can continue. Sorry about that.
Yeah, sure. But that was kind of all of my the long-winded answer.
Oh, that was great. That was great. That was superb, the explanation. But yeah, continuing on. Awesome. I think wow, that's such a great explanation. I think that actually gave me a fresher understanding on how this all works, the dynamics of it. So knowing that, two more questions. First, which one's getting more adoption? The YT stuff or the PT stuff? And then the second question that derives from that is the LP, right? So does technically LP just kind of gets the middle of it all, like the mid range, I guess, for the yield, the fixed yield, and then the mid range of the points. So how does that work?
Yeah. So again, to your first question, which one has more adoption? It's more like market demand. If market buys
Okay.
up one side, and then the other side will take up, and then again, like what I said, if the yield portion is high or the points portion is high, people will buy a YT, and then once it gets to a certain price level where the PT price is attractive enough, people will come in and buy PT. And when the yield or the point is no longer attractive, people sell off YT, and then people buy PT, and then the yield comes back down. Again, it's more cyclical. I wouldn't say it's more
Mm,
like there's one has more success of the other. It's like it's kind of like two sides of the same coin, and see which one people buy, and that moves price in a certain direction, and that kind of generates another um, you know price discovery for YT or PT. To your second question on LP, um, is it the middle of it all? Somehow, in terms of points and yields, sort of yes, it's in the middle of both. But I would
Mm.
consider the people providing liquidity have a much more different outlook or a different objective. Um, Providing liquidity on Pendle has negligible risk aside from smart contract risk. So you have no principal loss risk aside from smart contract risk, of course. But I think that's kind of like accepted in DeFi. Um, what I'm saying is that you cannot lose your principal by providing liquidity into Pendle. At maturity, you will get your principal plus additional yield. So again, because of this very limited downside risk, um, people have been pretty aggressively providing liquidity into Pendle to earn um, the fixed yield portion, because providing liquidity on Pendle also earns you a little bit of the fixed yield. I wouldn't go too deep into the mechanics. You can check out the docs for that. You also earn Pendle incentives. But I think at this point, given the amount of trading volume that we're settling, Pendle incentive actually make up a minority of the yields on Pendle. Then aside from that, you also earn swap fees. And again, because of how hyped the assets generally are, LPs actually earn fees straight away from people trading on the pool. So that kind of makes LP end up somehow being in the middle of PT and YT in terms of points exposure and yield exposure.
Right.
Um, but how it got there is the pretty interesting part. And the type of audience, the type of audience and users that provide liquidity is also different from the type of people who buy YT and PT.
I see. Yeah, that makes sense. And yeah, I've personally tried all three, and it's just fascinating to me because I can't quite grasp my mind around it. I've been reading up on it, and I'm just, yeah, it's interesting to talk to you about it, and I think I have a whole new understanding about it. Um, and I guess um, for for the common user that's wondering, what all this is about, can you kind of just give us a general on, again, one more summary about why people buy YT, why people buy PT, why people buy LP, and so that they can try it on their own, and do it as they want.
Yeah. So LP, I think, is a completely different thing. So let's not
Sure,
all cover LPs
sure.
later. But again, I think the why is just simply, I'll just to give a simple answer and use kind of like an example to kind of put everything together. You buy YT if you think that the yield of a given asset is gonna pay out more than what you pay for the yield. You buy PT if you like the fixed yield that it's giving. Now, what it means is, let's say, um, let's use real estate as an example. Let's say if you buy a house for $1 million as an asset, as an investment class, and then you can rent it out for, hypothetically speaking, a 10% yield per annum, which means every year you're gonna get $100,000 in rent. Um, what Pendle does is essentially strip away the yield portion, which is the rental income portion, away from the principal. So let's say, hypothetically speaking, for 1 year, we split away that rental yield away from the property. And again, this rental yield is trading at a free market. And like what I mentioned previously, this rental yield is expected to be 10%, which means you get $100,000 in rental income. Now, if this rental yield in the open market is selling for $80,000, would you buy it? I mean, of course, because you're paying $80,000 to receive the rental income of $100,000. It's worth it.
Mm,
You buy it. Um, Again, back to the previous example, PT plus YT makes up the underlying. If the underlying asset is worth $1 million, the YT or the yield portion is trading for $80,000. The principal is trading for $920,000. Now, at 1 year, the YT stops earning yield, which means the principal PT is made whole again, which means at maturity, the $920,000 will become $1 million again. So
mm,
if you're buying PT, you're basically buying that asset at a discount today because you're not earning the rental yield. because the rental yield is earning by someone is being earned by someone else who holds the YT. Now again, it's more like, do you think that this $920,000 to $1 million is worth it in price appreciation? If you like that fixed yield, if you like that security, you know that you're gonna get this amount of money at maturity, then you buy PT. And again, YT is more like you speculate on the yield of the asset. Now, on the other hand, if YT is trading at, let's say, $150,000, if you know that the rental income over a year is going to be $100,000, you're not going to buy it because you're not going to pay $150,000 to get $100,000. That said, again, how much yield that this asset generates, you don't know, and you can never
Right.
predict where yield goes in any asset. And that's where the fund comes in, and people speculate on how much the yield is going to be over the next couple of months, over the next coming years, or whatnot.
Right.
And that's why people speculate on YT. And again, because of
Right.
YT price fluctuates, that kind of affects PT's price as well. And
Right.
PT's kind of like the fixed yield portion. People just buy it for fixed yield. That's kind of the two. LPs just facilitate these trades. And if you don't know,
I
if you
see.
don't know anything about it, and you don't want to know it, frankly, you don't want to know anything about it, and you just like, hey, I just want yield. What do I do? And just provide liquidity then. You're basically facilitating all these trades while earning a little bit of
Right.
incentives. And at maturity, you can just take out your funds. Or if you want to exit any of the assets before maturity, that's fine as well.
Hmm. Yeah, I was just gonna get to the maturity date stuff, but yeah, just to recap for everybody. So YT people used to speculate on points and yields, whether it's undervalued currently and that it will pay out more at the end. And then PT is just the underlying asset where you get the fixed yield part. So yeah, so that then comes the maturity date stuff, because that's different ish from other APYs that's displayed on different DeFi protocols, right? Or is it not? I don't know. That's my question. So, how does maturity date affect? So, I get about I get it from the real estate example on the maturity date. It'll just come whole again. But what happens when somebody sells before maturity date? What usually happens? Do they not capture actually the? So, for example, if I buy it like 6 months before maturity date, and then I sell it on 3 months before maturity date, will I capture that 3 months of yield? Especially on the PT side, the fixed yield side. Is that what
No,
happens or no?
of course not. Before maturity, the price is still an open market price.
Mm,
It's like buying a bond before maturity. You're subjected to where the bond is currently trading at. It's just
right.
that the only agreement of the bond is that at maturity, it pays
It will be
out the
whole.
par value, the agreed value of the bond. Before maturity, it trades at wherever it wants to trade. But again, let's say you have a bond that is 1 year away and that is trading at 10% discount, so which is 10% fixed yield. Um, at like halfway point, let's say half a year in, even though the yield of the bond can go up 12% and then you exit it, you will likely exit it at a profit already, even though it'll probably be less than what you receive at maturity. Because as time passes, the price of the bond will approach maturity, it will approach its par value, but it will fluctuate over time. It goes up, it can go up or down, but it overall will trend towards its par value. Um, so you can exit a bond, or like PT before maturity. It's exactly like selling a bond before it matures. For YT, it's kind of the same thing, but different side, where YT at maturity is worth zero. Well, before maturity, you can sell it. But again, the price of YT trends towards zero. If you sell it halfway through, it'll probably about be half price, but it can be slightly above half or slightly below half, depends on where the market values it.
So for the YT, so if you do sell YT before maturity date, will you so you don't capture the points as well, or
You
will you
do,
actually capture some of the
you.
points?
It's it the receivables for YT is not backward looking. So whatever you've earned it. So if you feel like you've earned
Mm.
enough for YT, you want to sell it, you can sell it.
I see. So it's real time. Yeah. Okay. Got it. I think that that's very helpful for our users to understand more about how this works and how they can trade it. Because we, without this proper understanding, they would just, you know, won't know how what to do with it. But yeah, thank you for the explanation. I think that's very very educational for our users. So yeah, if anybody have any other questions on this, just drop a comment below, and I'll make sure to pass it on to panel, and we'd probably tweet about it or something. But yeah, thank you for the explanation, Dan. So before we close, one final question that we're all curious about. Pendle token itself, what's kind of the utility and the vision for the token? If you just want to give an overarching kind of educational explanation about Pendle token.
Yeah, sure. Pendle token adopts the VE model. Again, for the audience that don't know, it's pioneered by Curve, where you lock up Pendle to get VE Pendle. The longer you lock, the more VE Pendle you get. The more Pendle you lock, the more VE Pendle you get. The whole point of VE Pendle is that one VE Pendle entitles you to three things. You can boost your LP rewards, which means that if you're providing liquidity on Pendle, if you hold VE Pendle, you can boost your LP yields. Of course, the more VE Pendle you hold, the more boost you'll get, at a maximum of 250%. That's the first one, boosting. Second one is voting, where if you have VE Pendle, you are entitled to vote to which pools in Pendle is entitled to receive the incentive, the Pendle incentive, for liquidity providers. Now, what this means is that protocols that have their own pool on Pendle might want to accumulate the token to vote for their own pools, for their own pool to receive incentives. I think this is pretty apparent from pools like, for example, EtherFi, Renzo, or the LR2 protocols. The majority of their TVL comes from Pendle. And if protocol wants to grow their TVL, I think it all makes a lot of sense for them to hop into Pendle and, vote for their own pools to receive incentives and to attract liquidity in. And that kind of generates another source of demand for people to want to come in and lock up Pendle. Then the third is just receiving a portion of the protocol revenue. I think at this point, 100% of the Pendle revenue goes to VE Pendle holders. What that means is locking Pendle for VE Pendle entitles you to a share of the protocol's growth and revenue. What's interesting about Pendle is that if you vote for a pool, you actually get 75% of the pool it's the swap fees of the pool. What that achieves is that for people who have no incentive to vote for anything, they're incentivized to vote for pools with higher volume, because the logic is the pools with higher volumes deserves more incentives, because pools with higher volume gives us more revenue, and you want that pool to be deeper, so you want to incentivize that pool. So if you vote for that pool, you get majority of the swap fees of that pool. That has actually been a pretty successful driver for votes for VE Pendle. And the yields that we get simply from revenues for voting alone, which means the yield that you're getting from the protocol fees, if you vote pretty efficiently, you can pretty comfortably get around 40 to 70% APY, just from protocol revenue alone. So it's not like we're printing yield to incentivize people to like lock in their amount. It's just that the protocol is actually generating a pretty decent amount of swap fees. I think that's kind of like a long-winded way of explaining the Pendle utility, but the whole idea is you lock Pendle for VE Pendle. VE Pendle is basically your alignment to the protocol, and you are entitled to have a say in the protocol governance, where incentive goes. You're entitled to the protocol revenue, and you're entitled to boost your own incentive as well.
Awesome. Anything that exciting ahead on the roadmap? Anything you want our users to know?
Yeah, I think for Pendle, we remain neutral in general, so we're not attached to any ecosystem or anything. So we
Mhm.
can hop into narratives as fast as possible. And then there are quite a few narratives that are hopping up recently. I think BTC L2 is something that is attracting a lot of VC hype at the moment. Something that we will probably hop onto next couple of weeks. But in the longer term, we've teased this a little bit. We are in the midst of building Pendle V3. Um, they'll solve a lot of the pain point that we have currently for Pendle V2, and a lot of it is uh, building up the protocol from the ground up to to enable yield trading of different scale, especially more on the institution side of things. And yeah, I think that's kind of the tease that I can
Wow.
give for our
Those two
future.
things are already exciting to me. So yeah, congratulations once again to Dan and the Pendle team, and for the generally very successful past year or so. So yeah, any last words for our Indonesian users? Maybe.
Uh, Nothing much. Appreciate you guys for taking the time to have me in the recording. Sorry, I can't do it in Indonesian. I'm Indonesian myself, but I kind of lost the ability to speak Bahasa at this point. I can understand though, but speaking is all gone. So thanks for accommodating for me. But yeah, it's pretty good to see this. And just one thing I want to share. Um, we have a we have an increasing amount of audience from Indonesia from our socials and app visits. So that has been pretty interesting. Though in terms of address interaction on the protocol, it's not much yet, but I do attribute
Mhm.
it to lack of understanding of the protocol. But I appreciate that there are more interests from Indonesians to the protocol, and looking forward. I'll personally be in CoinFest Bali, so if any of you guys are there, do say hi.
Awesome. Yeah. Yeah, glad to hear that you have an Indonesian descent, and sad to hear that your Bahasa Indonesia has disappeared, but hopefully it'll come back and soon maybe. But
Hopefully.
yeah, we're excited, and I think this podcast will help our users to actually know what Pendle is all about, and hopefully they won't just visit the site and actually get got value from Pendle. So anyway, just want to close out this podcast. I want to thank you so much to Dan from Pendle for being here, for educating our users. And yeah, so that's just another episode of Poppin, Podcast Pintu. And we will see you on the next episode with another special guest. Thank you guys so much. Don't forget to like, comment, and subscribe to our channel. And also give Pendle all the love. Do follow them on socials, join their community. And I'm sure you can ask a bunch of questions if you do have questions on their community. So, yeah, thank you guys so much. We'll see you on the next episode.